back. My name is Santosh Nair and this is Line of Commerce. This is my second video on partnership basic fundamentals. In the first video, I explained you about profit and loss appropriation account. And in this video, I'm going to take you deeper into the topic. So if you have not watched my first video, please do watch it. The link is there in the description. And if you like my video, please do subscribe it and share it with your friends. Okay, let's start the topic. So friends, let us first understand all the provisions if partnership deed is silent or if it is absent. So if the partnership deed is silent or if it is absent, then the Indian Partnership Act 1932 is applicable. So let us watch what it is. Nice music, right? But did you see the provision? No interest on capital, no remuneration, no interest on drawings. Profits and losses will be shared equally. And if a partner has granted loan to the firm, on such loan, interest rate will be 6% per annum. The last two provisions are very important. If in the question profit sharing ratio is not given, please do take it equal. And you may get this question in your board examination, this one. Please read it. You may say the answer is 6% per annum, but actually that's not a proper answer. Let's see what will be the proper answer for this question. So this is how you should answer this question. The rate of interest will be as mentioned in the partnership deed. And if partnership deed is absent or if it is silent, then the interest rate will be 6% per annum. Hope you understood this. This is the proper answer. Let us now learn the difference between charge against profit and appropriation of profit. Let us see what it is. So, charge means it's an expense which you need to deduct it from your revenue to find out your profit and loss. Whereas appropriation means it's division of profit among the partners as per the partnership deed. So this is the basic difference between charge and appropriation. Now, if you ask me some examples of charge and appropriation, some examples are these: rent paid to a partner, interest on loan by a partner to the firm. It's very important item. Whereas appropriation example are partner's salary, commission, interest on capital, etc. So these are some examples of charge and appropriation. Now, these appropriation, what I told you, partner's salary, partner's commission, interest on capital, these can be also a charge if it is mentioned in the partnership deed. If it is mentioned in the partnership deed that interest on capital will be a charge, then you need to treat it as charge. Okay, now the point is why I am explaining you this difference, charge and appropriation. Sometime in the question, they give the profit before these charges. Please always remember, when you take net profit on the credit side of your appropriation account, that net profit should be after all the charges, but before all the appropriation. I will show you what I'm talking about. This is the format of appropriation account, you know that. Now, the net profit what you take in the credit side of your appropriation account should be after all the charges but before all the appropriations. So these are the Examples of charges, once again, it is there. Examples of charges are interest on partner's loan, rent to a partner, manager's commission, etc. So if the profit given to you in the question is before these charges, then you need to deduct it, and then the remaining profit only you have to take it in the credit side of your appropriation account. Okay, now sometimes the profit may be given after appropriations, after these appropriations. Then what you have to do is add back these appropriations and then take the profit on the credit side. So this is why I was explaining the difference between charge and appropriation. When you get the question, read it properly. If it is after any appropriation, add back the appropriation and then take. And the most important case is this: if the profit is before any charges, and this is what they ask in the board examination, if the profit is before any charges, deduct that profit, and then the remaining amount only you have to take it in the profit and loss appropriation credit side. Okay, please do remember this. Now it's time to understand what are the two different methods of preparing our partners' capital accounts. Understand partners' capital account. There are two methods of preparing partners' capital account. First, fluctuating capital method, and second, fixed capital method. Let us first understand what is a fluctuating capital method. Under this method, all the transactions of a partner with the firm is transferred to partner's capital account, such as interest on capital, interest on drawings, partner's remuneration, share of profit and loss. So because of this, what happens? The balance of this capital account keeps fluctuating. Okay, that's why it is called fluctuating capital method. Let us understand the format of partners' capital accounts under fluctuating capital method. So this is the format. Now if you see on the credit side, the first item there is by balance BD. So if you have a opening credit balance, then you need to write that in the credit side as by balance BD. Next, on the debit side, if you have a opening debit balance, then you have to write to balance BD. So if you have a credit balance, it will go to credit side as by balance BD. If you have a debit balance, then it will go to debit side as to balance BD. Okay. Now, if a partner is bringing additional capital to the firm, then you will record that on the credit side as by bank or by cash. Next, the interest on capital which partner receives, it is credited here. Next, partner's salary, again this partner receives, that is also credited. Next is the by profit and loss appropriation account, the divisible profit share, that is also credited. See the items which come on the debit side of partner's capital account. The first one is if a partner has withdrawn capital out of the firm, then you need to write it on the debit side as to cash or to bank. Then, if you have made any drawings out of your profit, that also will come on the debit side as to drawings account. Next is interest on drawings. So drawings and interest on drawings both comes on the debit side of our fluctuating capital account. Next is to profit and loss account, that is basically the share in loss. So these are the items which come on the debit side. If you have withdrawn capital, you will write on the debit side. Drawings, you will write on the debit side. Interest on drawings, you will write on the debit side. Share in loss, you will write on the debit side. After writing this debit and credit, then you need to find out the difference. The difference can come on the debit side, the difference can come on the credit side. If the difference is coming on the debit side, that is to balance CD, basically that is your closing credit balance. Whereas If the difference is coming on the credit side, you will write it as by balance CD, that is closing debit balance. Now, this is how you prepare partner's capital account under fluctuating capital method. I hope the format of capital account is clear now. Now let us see how to prepare fixed capital method. Fixed capital method. Under this method, the capital of the partner remains fixed. It will only change when a partner brings in additional capital to the firm or when he withdraws capital out of the firm. Under this method, we prepare two accounts: partner's capital account and partner's current account. So, this is the format of fixed capital method. We have to make two accounts. One is capital account and the second account is current account. In capital account, the capital transaction of the partners will come. First item on the credit side, you can see by balance BD, that is the opening credit balance of the capital. Next, if an additional capital is brought in by the partner, that will come as by cash or by bank. On the other hand, if the partner has withdrawn capital out of the firm, that will come as to cash or to bank. After this, we need to find the difference that will give you the closing balance of the capital account. So in capital account, only the capital transactions of the partner will come. When I say capital transaction, capital brought in by the partner, capital withdrawn by the partner, and opening capital and closing capital. So only this items comes in the capital account when capitals are fixed. Now let us go to partner's current account. Now, current account also have opening balance. If it is credit opening balance, write it as by balance BD. In case if it is a debit opening balance, write it as to balance BD. Now, after this, if you see all the items which I have discussed in the partner's capital account when it was fluctuating, it will come in the current account. Because if the partner's capital accounts are fixed, all the accounting entries other than capital withdrawn and capital brought in by the partner, every accounting entries will be done through partner's current account. Whatever partners are receiving, like interest on capital, partner's salary, commission, profit and loss appropriation, that is share of profit, all these comes under the credit side. Whereas on the debit side, drawings made out of profit, interest on drawings, division of loss. These three items come on the debit side of the current account. And then, of course, the difference you have to find out. Difference can come on the debit side, it can come on the credit side. If the difference is coming on the debit side, it is to balance CD, closing credit balance. And if the difference is coming on the debit side, it is again by balance CD, that is closing debit balance. So this is exactly how we prepared capital account under fluctuating method. Only difference here is the capital transactions of the partner will go to capital account and rest of the transactions of a partner will come in the current account. So I hope the capital accounts methods are clear now. Now let us do some numerical questions, more understanding of the concept. So this is the question. X and Y are partners sharing profits and losses in the ratio of 2:1. On 1st April 2019, their capitals were X rupees 5 lakh and Y rupees 4 lakh. Prepare profit and loss appropriation account and the partners' capital accounts at the end of the year from the following information. Interest on capital is to be allowed at 5% per annum. Interest on the loan advanced by Y for the whole year, the amount of loan being rupees 3 lakh. This is one very important adjustment of charge. Partners drawings X 1 lakh rupees, Y rupees 80,000. Interest on partners drawings are rupees 3,000 for X and rupees 2,400 for Y. 10% of the divisible profit is to be transferred to general reserve. Profit before giving effect to the above for the year ended 31st March 2020 is rupees 7,02,600. So this is our question. Let's solve this question. Let us first do the working notes. So this is the working notes to calculate profit after interest on Y's loan. So in the question, profit before interest on Y's loan is given as 7,02,600. And remember, interest on Y's loan is a charge. So you need to first deduct that charge, and then the remaining profit only you need to take it in the profit and loss appropriation account. That is why this working note is done. So the profit after interest on loan is coming to 6,84,600 after deducting interest on Y's loan 18,000 rupees. So this is the working note done to calculate the net profit after interest on Y's loan. This is how you need to do if there is a charge given in the question and profit is before that charge, before providing that charge. This is one important adjustment. So let's go to the next working note. Calculation of interest on capital. Excess capital was 5 lakh, so I calculated 5 lakh into 5 by 100, that is 25,000. Y's capital was 4 lakh, 5% of that is 20,000. So this is the second working note. We have few more working notes. We will do that later. Let us first go to the profit and loss appropriation account. So this is the profit and loss appropriation account. See the heading, how the heading should be there. Profit and loss appropriation account for the year ended 31st March 2020. This is how you need to put the heading. So the first item now in this account will be by profit and loss account. That is the net profit after interest of Y's loan, which you have calculated in the working notes. So that is the first item in the credit side, 6,84,600. Second item on the credit side is interest on drawings, which was directly given in the question. Excess interest on drawings was 3,000 and Y's interest on drawings is 2,400. So total is 5,400. So there are two items on the credit side. Now let us go to the debit side. So debit side to interest on capital, this also you have calculated in the working notes. Excess interest on capital is 25,000. Y's interest on capital is 20,000. So it is summing up to 45,000. Now we have to do one more working. That working is related to general reserve. If you remember the question, general reserve is to be 10% of the divisible profit. Now we need to find out the divisible profit. The divisible profit is nothing but the difference of debit and credit. Here in credit we have two items, the profit and interest on drawings. And debit we have one item, interest on capital. So the difference of credit and debit will give you the divisible profit, and then on that we need to find out the general reserve. Let us see that. Okay, so calculation of amount transferred to general reserve. First we need to find the divisible profit, and this is how you will find the divisible profit. Profit plus interest on drawings minus interest on capital. So if you calculate that, you are getting 6,45,000 rupees. So this is your divisible profit. So please remember how to calculate divisible profit. It is just the difference of credit and debit. And always see whether the percentage is on divisible profit or is it on net profit. So you should be careful about these. Okay, so here the divisible profit is 6,45,000. Let us find what will be the amount of general reserve, that is 10%. So amount transferred to general reserve is 6,45,000 into 10%, that is 64,500. Hope you understood how to calculate the general reserve. Okay, next, general reserve. It will also come on the debit side. We have already calculated that in the working note. So that is my working note number 3, 64,500. Now, after putting the general reserve, let us find the divisible profit. So the divisible profit here, it is coming 5,80,000. So that is again the difference of debit and credit, which has to be distributed among the partners in their profit sharing ratio, which is 2:1. So when we calculated that, we are getting X's share as 3,87,000, whereas Y share as 1,93,500. So this is how you prepare profit and loss appropriation account. And then you do the total of both the sides, 6,90,000, 6,90,000, and close your account. So this is how profit and loss appropriation account is prepared. Now let us see how to prepare partners capital accounts. Partners capital accounts. Format is particulars XY, particulars XY. The first item on the credit side is by balance BD. These are the opening capitals of the partners given in the question. 5 lakh rupees for X and 4 lakh rupees for Y. Next item here is by interest on capital. So that is 25,000 for X and 20,000 for Y. This is calculated on the debit side of appropriation account. Next item here is by profit and loss appropriation account. This is the divisible profit which each partners are receiving. So X, it is 3,87,000, and for Y it is 1,93,500. So basically on the credit side, whatever partners are receiving, those items will count. On the debit side, we have drawings. It is directly taken from the question, 1 lakh rupees for X and 80,000 for Y. Next is interest on drawings, 3,000 rupees for X and 2,400 rupees for Y. Now after putting the debit items and the credit items, now the last step is find the difference of credit and debit. So that difference will be your closing balance. That is to balance CD. For X, it is 8,09,000 rupees. For Y, it is 5,31,100. So these are the closing balances of each partner. This is how the capital account is prepared. Now, one important thing which I want to share with you all is students try to bring the debit items of the appropriation account to the credit side of the capital account and the credit items of the appropriation account to the debit side of the capital account. Now, while doing this, you should be careful. There is one item which will not come in appropriation account. It will directly come in partners capital account, and that is drawings. Drawings are not shown in appropriation account. It will directly come in the capital account. So if you are bringing the items cross from the appropriation to credit side of capital account, and then from credit side of appropriation to debit side of capital account, don't forget to write drawings on the debit side. This is a board exam question, and most of the students did it wrong. Why? I'll tell you. See the adjustment. On 1st November 2018, Yadu gave a loan of rupees 80,000 to the firm. Students just read this part and they calculated the interest, and then they have deducted that interest from the profit given in the question, that is 2,53,000. They missed out on one very important adjustment. This one. Profit is given 2,53,000 after interest on Yadu's loan. That means the interest is already deducted and then 2,53,000 is given as net profit. So if the profit given in the question is after charge, after interest on partner's loan, then no need of deducting the interest again. You need to deduct it when the profit given in the question is before charge, before interest on partner's loan. So you should be very careful. Hope you are enjoying my video. Now let us see, what if the total amount of appropriation is more than the net profit available to you. I told you right, I will cover the entire syllabus, all the details I will include in my video. By the way, this topic is a hot favorite topic in board examination. Now let us see how to do this. So this is the question. On 1st April 2013, Brij and Nandan entered into partnership to construct toilets in government girls' school in the remote areas of Uttarakhand. They contributed capitals of 10 lakh and rupees 15 lakh respectively. Their profit sharing ratio was 2:3 and interest allowed on capital as provided in the partnership deed was 12% per annum. During the year ended 31st March 2014, the firm earned a profit of 2 lakh rupees. There is profit, okay? Now prepare profit and loss appropriation account of Brij and Nandan. By the way, this is also a board exam question. You can see that circles there with one, that is actually the marks allotment. Okay, so let us see the solution. Now, if you calculate the interest on capital, go to the working notes and see interest on capital of Brij is 1,20,000. Interest on capital for Nandan, it's coming 1,80,000. If you add these two, it will be 3 lakh. Your available profit is only 2 lakh. See, by profit and loss account, 2 lakh is only available. Now, you cannot appropriate 3 lakh out of 2 lakh. So whenever you have this situation, this is what you have to do. You need to distribute whatever profit is available to you in the ratio of appropriation. Here the appropriation is interest on capital, so we need to just distribute it in the ratio of interest on capital. So the interest on capital ratio is what I calculated is 2:3. So just divide that 2 lakh rupees in 2:3 ratio. Okay, so you will get 80,000 for Brij and 1,20,000 for Nandan. In this question, I'm covering the fixed capital account method. So you can see the question, A and B are partners with fixed capitals of rupees 60,000 and rupees 20,000 respectively. On 1st April 2019, net profit before giving effect of the partnership deed for the year ended 31st March 2020 was rupees 24,000. The partnership deed provides for the following. B is to get a salary of rupees 6,000 per annum. Interest on capitals is to be allowed at 6% per annum. Interest on drawing is to be charged rupees 200 on A and rupees 100 on B. By the way, in the next video, I'm going to explain the concept of interest on drawings. So please do watch that video and clarify all your doubts and concepts. Okay, so drawings of the partners A and B were rupees 8,000 and rupees 4,000 respectively. The current account balances are A rupees 6,850 and B rupees 2,850 debit balance. Okay, so let us see how the profit and loss appropriation account is prepared, how the capital account will be prepared, and how the current accounts are done. Let's go to the solution. Now you know this, how to prepare appropriation account. First item in the appropriation account is the net profit given in the question by profit and loss account, that is 24,000. Next in the credit side is interest on drawings. Interest on drawing is 200 rupees. B's interest on drawing is 100 rupees, so that sums up to 300. Now if you see, I have written A's current account, B's current account. This is a standard format how you should write when you get a fixed capital question. Let us go to the debit side, to interest on capital. So I calculated the interest on capital there itself. Now this is another method. You remember the previous question, I did working notes. You can do working notes or you can do it like this also. So there itself I have calculated, but still I'm writing here and showing the calculation. So A's current account 60,000 into 6 by 100, that is 3,600. B's current account 60,000 into 6 by 100, that is 1200 rupees. So this is how the interest on capital is calculated. And see, again I have written A's current account, B's current account to show that this interest will go to their current accounts. Next item is B's salary. Again in bracket I have mentioned B's current account. Again it shows that it will go to the current account, 6,000 rupees. Next, after putting the debit and credit item, I can find my divisible profit, and that divisible profit will be divided among the partners equally, since the profit sharing ratio is not given in the question. It will be equal. You remember the provision in the beginning of the video? I showed you the provision. If partnership deed is silent or if partnership deed is absent, the profit sharing ratio will be equal. So the divisible profit is divided among the partners equally, 6,750 for each partner. This is partners' capital accounts and current accounts. Let us see how it is prepared. First, partners' capital account. If you see on the credit side, it is by balance BD. So these are the opening capitals of the partners, 60,000 for A and 20,000 for B. Now there is no other adjustment because no partner is bringing additional capital to the firm, neither any partner is withdrawing capital out of firm. So there is no adjustment further in the capital account. So we can close the capital account by calculating balance CD, the closing balances of the capital. Again, it will be same as the opening balance, that is 60,000 and 20,000. So this is how we prepare partners' capital accounts. Let us go to the partners' current accounts. Now, if you see for A, the opening balance is on the credit side. By balance BD is on the credit side, 6,850. Whereas, if you see for B, the opening balance is on the debit side. It's given in the question, 2,850 debit. So this is where you should be careful. If the balances say debit, you need to write that on the debit side. Next. Now, interest on capital. Partner is receiving that, so it will come on the credit side, 3,600 for A and 1,200 for B. Next is salary. Only B's salary is there, so only in B's column 6,000 rupees has come. Next is the share in divisible profit, 6,750 for A and 6,750 for B. So these are the items which come on the credit side. Let us go to the debit side. As you know, drawings will come, that is 8,000 for partner A and 4,000 for partner B. Next is interest on drawings, 200 for A and 100 for B. So after writing this debit and credit items, just find the balancing figure. That will be your closing current account balances, 9,000 for A and 7,000 for B. So this is how you prepare partners' current account. Hope it was clear. So we have come to the end of this video, and I believe that it has definitely added some value to you. And if you also believe the same, consider subscribing my channel, share it with your friends, hit that notification bell so that you get all the updates. And also, please do write your feedback. It will definitely help me to make better videos. Meet you soon in the next video. Till then, take care. Goodbye.